This video covers 7&I Holdings for second quarter financial results of FY 2025, the period from March 2025 to August 2025. 7&I Holdings is a large Japanese retail holding company that owns 7-Eleven convenience stores. There was an acquisition proposal from Canadian Alimentation Couche-Tard, but it has been officially withdrawn. As part of its structural reform, the supermarket business, including Ito-Yokado, was sold to Bain Capital, but 7&I still holds a stake as an equity method affiliate. As a result, 7&I Holdings plans to focus on its convenience store business centered on 7-Eleven. In the first half of fiscal year 2025, both total sales and revenues from operations declined year-on-year, mainly due to lower fuel prices and overseas factors. But operating income increased, supported by profit growth in overseas convenience store business and the positive impact of structural reforms, which reduced special losses. Last year, there was a temporary loss caused by the closure of several unprofitable Ito-Yokado stores. However, the effects of the restructuring reforms have started to appear. As a result of these closures, profitability improved substantially despite lower revenues, reflecting stronger operational efficiency. The first-half progress rate against the revised full-year net profit target of 265 billion yen is 45%, but the company appears to be on track to achieve its plan for the year. Overall operating income rose year-on-year, mainly driven by growth in overseas convenience store operations and superstore operations. Domestic convenience store income declined partly due to higher costs, including increased expenses. In particular, the overseas convenience store business contributed a gain, while the superstore segment recorded a sharp improvement due to business restructuring. As a result, consolidated operating income rose compared with the previous year. 7-Eleven Japan. Operating income decreased compared to the previous year, mainly due to lower gross profit margins and higher expenses. Existing store sales grew slightly, supported by increased average spending per customer. Sales per store improved modestly, but rising costs and a slight decline in merchandise margins limited profit growth. Overall, 7-Eleven Japan maintained stable sales performance but faced some profitability pressure in the first half. 7-Eleven Inc., the U.S. convenience store business. Operating income increased, driven by higher merchandise sales and improved product margins. Same-store sales excluding cigarettes rose and the average basket size increased steadily. However, overall same-store sales were affected by lower fuel sales volumes. Despite these factors, gross profit margins improved slightly, showing better cost management and better merchandise performance. Superstore operations. Profit increased significantly, mainly due to the recovery of Ito-Yokado and York Benimaru, as well as contributions from other related businesses. The overall improvement reflects restructuring effects and better cost control. Overall, both the superstore and other segments showed strong year-on-year improvement in profitability, contributing positively to the group's consolidated earnings. 7&I lowered its forecasts for group total sales, revenues from operations, operating income, mainly reflecting weaker than expected performance in the first half and the sale of certain businesses. However, net income was revised upward because of reduced special losses and the effects of structural reforms. As a result, while overall revenue and profit targets were slightly reduced, bottom-line profit and earnings per share are expected to increase, indicating improved efficiency and better earnings quality. 7&I plans to pay an interim dividend of 25 yen per share, which is an increase from 20 yen in the previous fiscal year. The total annual dividend forecast is also set at 50 yen per share, showing a continued trend of dividend growth. 7&I emphasizes that it aims to achieve consecutive dividend increases as part of its shareholder return policy. Since the progressive dividend policy is being maintained, dividend payments are expected to remain promising going forward. In terms of shareholder returns, 7&I reported steady progress in its share repurchase program, having achieved about 58.8% completion of the total planned buyback amount as of the end of September. Additionally, it confirmed that the sale of the Superstore Business Group was completed in September and that the deconsolidation of 7 Bank was finalized in June. As previously reported, Seven Bank has formed a capital alliance with Itochu and is considering providing various financial services, including ATM services, in collaboration with Itochu's subsidiary FamilyMart. Stock price. This is the Japanese yen base chart for the last 1 year. The Japanese yen stock price is 1,980 yen as of October 9th, and the US dollar stock price is $12.66 as of October 9th. Thanks to the influence of the new LDP leader Sanae Takaichi, the Nikkei 225 continued to rise. However, at the end of July, Alimentation Couche-Tard's withdrawal from the acquisition caused 7&I stock price to decline and remain sluggish. The current PBR is 1.34 and the PER is 18.1, with a dividend yield of 2.53%. Compared to the past few years, PBR, PER, and dividend yield indicate that the current stock price is relatively low. Conclusion. Despite lower revenue, operating income improved thanks to cost control, restructuring effects. Domestic convenience stores struggled, while U.S. stores and superstores showed stronger profitability. 7&I maintains dividend growth and strengthens shareholder returns, positioning 7&I for more efficient and profitable operations going forward. With structural reforms completed and a new president in place, 7&I is focusing on rebuilding its convenience store business, and it remains to be seen how successfully they can turn it around.